Hi traders, in this video I'm going to show you what we need to look at for the ECB rate meeting this week. It was expected to be a very sleepy summer meeting for the ECB. That has all changed after the ECB's strategic review. So have a look in this video so you can know what the most hawkish and the most dovish outcomes are likely to be so you can be prepared for them in advance. Hi traders, coming up on Thursday we have the ECB press conference and monetary policy statement. Now these are eagerly anticipated meetings. Going into the meeting, traders had been thinking that this ECB summer meeting would be a non-event, but now there are some expectations that the ECB may surprise markets. Now let me explain to you what's going on. The ECB currently have three main tools to support the Eurozone: interest rates, the emergency asset purchase program, the PEP program, and the general asset purchase program called the APP. So we've got three things: interest rates, the PEP program, and the APP program. Now the PEP program is the emergency COVID-19 program. That's due to expire March 2022. So that should be running out shortly in March next year. However, Christine Lagarde gave some hints coming into the meeting that the emergency PEP program could maybe change into something else. So markets are speculating that some of the PEP emergency bond purchase program is going to end up in the general asset purchase program. So the PEP is going to be replaced by a beefier APP program. Now that should be Euro weak. So going into the meeting, we have seen a little bit of euro weakness, and that euro weakness has just been on that kind of has just been on that sentiment. And if I just take this chart and open it up, there we go. What you can see, the euro has been sort of weakening into the event. Now we are testing this key trend line area, just running up from the lows in November 2020, the lows of April 2021. Now, this is what I'm looking for. If the ECB give a hawkish twist, so if they say we're not going to change the PEP program, that's due to expire in March 2022, and we're not going to be increasing the APP program. If anything, we're going to look at reducing it, and the Eurozone recovery, we're expecting that to be in place, so we're looking at policy normalization next year. If they said something like that, that would be a great opportunity to go long the euro-US dollar. And even if price moves slightly lower than price currently is at the moment when I'm making this video, that would be a great opportunity to lean against this trend line and look for a retest of that 1.2 and then that 1.2200 region. So that is in that scenario. Now, a dovish scenario would be if the ECB say something like, yes, the PEP program is due to run out at 2022, but we could extend it further. And in the meantime, we're expanding the asset purchase program to 60 billion euros a month. Then that should be euro-dollar weakness. And we'd expect to see the euro-dollar fall rapidly. Now, there's one caveat we have to be aware of. Sometimes, and this is the case with the euro, on occasion, if the markets perceive the increase of asset purchase to be so supportive for the Eurozone, we can see the euro rally sometimes, even when an asset purchase program is extended. Now, normally you'd expect that to be euro weakness, but in this instance, in this particular case, we just have to watch out that if they do extend the asset purchase program, that doesn't equate to euro strength. So just to be aware of that going into the ECB meeting. But either way, it's a hotly awaited meeting. Now, a sources piece prior to the meeting said that the ECB, due to a big disagreement, won't be mentioning bond purchases. So there will be a lot of emphasis and focus on the press conference after the monetary policy statement. So don't forget that if the monetary policy statement disappoints, then the ECB press conference could find fresh direction as Christine Lagarde may indicate what the controversy is, what future direction of the ECB is going to be. Either way, this is one of the most hotly anticipated ECB rate meeting that there's been for a while. So definitely, it's not one to miss.